Okay, peeps, welcome back. So today we're going to be talking about the Defiance ETFs Dividend Declaration, which just came out today. Let's get it. So before we get into the content, I just wanted to let you guys know that we are a little bit late today getting to the video. Main reason being is because we were trading this morning, but not only that, but we also are having to get our tax situation together. As you guys know, most companies send tax forms out, if they're going to send them out, somewhere right around this time, right around the end of January to the middle of February, somewhere in there. So we've been trying to deal with that all morning. And also, the FOMC meeting was this morning. So the quick short on that is basically that Powell came out and said that they're not going to start cutting rates this month, which we kind of expected. I think probably the only other important thing I could think of was that Powell stated that the likelihood of a March cut is pretty low, but again, we'll have to wait and see on that one. The thing that I always say when it comes to the Fed, politics, and the media is watch what they do, not what they say. Okay, so we'll just have to wait and see how that turns out when March comes around. Anyways, with that being said, let's take a look at the first one here. So this is QQQY. These are the Defiance ETFs. For those of you guys that have not seen this content and are new, there's three of them. There's the QQQY, which is the NASDAQ one, the JEPY, which is the S&P, and the IWMY, which is Russell 2000. And for those of you that have been following the channel for a while, you know exactly what we're talking about. So as you guys can see down here, the declaration for this was today. The last day to be able to get in before the X date is today. But of course, if you guys are invested in this, you would probably know this already. So it does appear that there was an increase. So we got roughly about a 23-cent per share increase on the price of this. So that's definitely nice. I will happily take that. Now here's the S&P version, the JEPY. So it looks like we also got a slight increase on JEPY here, although not as big as QQY, but that's fine. Something's better than nothing, you know, as we always say. So we'll take it. And then the last one that we have here is the IWMY, and I actually just noticed that it looks like they have another ETF here. So I'm gonna have to take a look into that, and if I think it's worthwhile, then I'll go ahead and do a video for you guys. But I am curious to know what that's about. So the Russell 2000 version had a massive increase, as you guys can see, 29% here. I think that's actually bigger than QQY. And we did buy some more shares of IWMY this morning before the X date. That's coming tomorrow. So $1.29, which is the biggest one by far. So can't complain about that. So now we're taking a look at the portfolios here. As you guys can see, we have 17 shares of QQY on the M1 portfolio. This is the only Defiance ETF we have on here, just so you all know. And then we'll scroll down here real quick, and you guys can see that from the last time that we showed you guys this portfolio, the IWMY is up. That's because we bought more this morning. And then we have the JEPY and QQY. So let's take a look and see roughly how much in dividends we're expecting to get. So you got 129 times 1377. So the IWMY should give us roughly about 18 bucks. And we have to go back here and take a look at the QQY, which I can't remember off the top of my head what it was. I think it was 85 cents. Yeah, 85 cents. Okay, so we got QQY here. So we have two different holdings of QQYs. So 17.12 and the 51.43. Now, you guys are probably wondering, why do we have more of QQY than we have of JEPY? Well, the answer is pretty simple, because the NASDAQ is more tech-heavy than the S&P, although a lot of the Mag 7 companies are listed in the weightings of both the S&P and the NASDAQ. They're more heavily weighted in the NASDAQ. And as you guys know, a lot of the reason why the markets had a huge rally last year, not all the reason, but a lot of it is because the Mag 7 companies just moonshotting. So, in my opinion, I think that it is better that we have the triple QY as a heavier weight than the JEPY. So the last ETF here is the JEPY. We'll take a look at this real quick. So JEPY is 58 cents. Yeah, sorry about this, guys. The portfolio is doing some weird stuff today. So 51.37 times 58 cents. Okay, so roughly about 30 bucks on that one. So we'll add all these together. So we got 58.26 plus 17.76. So yeah, that should come out to be a pretty nice amount to start off the month of February. I mean, 105 bucks. Can't complain about that, right? So those are our current positions and roughly about what they're going to pay us. And in terms of total return, I took a bird's eye view look at the triple QY and JEPY. We're a little bit out of the money on these in terms of real-time quotes. But overall, I believe I'm pretty sure that our total return is actually outperforming pretty significantly in comparison to the unrealized drawdown that we're in right now. And the same is also true for M1 Finance. We'll have to go over that and make a separate video on that. Just so you guys can see in real time what our portfolios are doing and whether we're actually in the money in total return or not. So anyways, I hope you all enjoyed this content. Let us know what you guys think about the Defiance ETFs. Are you going to buy more? Are you guys bullish on them, bearish on them? Do you guys think that they'll go down in value along with the markets when the Fed cuts? Let us know. So anyways, please like, comment, and subscribe, and we'll see y'all later. Peace.